Medical innovation starts with medical discussion. Talking about the future and what comes next with Project MedTech.
Hello, everybody. I'm Lindsay Deneen, Director of Marketing and Engagement at Project MedTech, and welcome to another episode of the Project MedTech podcast. If we can help you in any way, or you would like to suggest a future guest, you can email us at info@projectmedtech.com. If conversations like this are helpful, that's exactly why we bring people together at our signature events, the Midwest Showcase, the Startup Symposium, and Coming to America. For more on our events that include networking, education, and pitch competitions for startups, check them out at www.projectmedtech.com. We even have sponsorship options if your company is also dedicated to accelerating medical technology to impact patient lives. So reach out today to get involved. The Project MedTech podcast is proudly sponsored by Ward Law. Ward Law Office, LLC is a boutique law firm specializing in the practice of patent and trademark law. They are committed to providing inventors, entrepreneurs, and businesses of all types with personal and professional services and are flexible to meet your unique needs. It is their goal to both educate on how to secure valuable patent and trademark protection and to provide high-quality services at rates affordable to independent inventors, startups, and small businesses alike. Without further ado, let's dive in.
Okay, Sarah, welcome to the podcast.
Thanks. Great to see you.
Yeah. Sarah, so I think it'd be great to do a introduction to yourself, your background, kind of leading up to what you're currently doing. And for those listening in too, I mean, Sarah's spoken at a couple of our events now, one in Houston, one in Philly. But yeah, I think for the listeners listening in, Sarah, it'd be great to get an introduction.
Yeah, great. Thank you. So I've been in healthcare for my career now, as an operator and now as an investor. So for the past almost a year now, I've been at Angelini Ventures, focusing on health tech investing across medical technologies and digital health. Before that, I was an investor at Wyndham Capital Partners based in New York, investing in similar categories. And before that, I was running strategy and operations for a digital health startup based in New York, all focused around healthcare data interoperability. So worked a lot with healthcare data and the infrastructure behind that. But at Angelini, we're investing in companies ranging from tech-enabled services to AI and in healthcare IT, to more digitally enabled medical devices. Mostly investing around Series A and B companies. And ones that address a large unmet need, and can really show value down the line with reimbursement and provide value to all strategic stakeholders.
Yeah. How large is the fund? And then, I mean, I know this, and probably judging by the name of it, it's split between US and Italy. Do you have a geographical focus to that? Or is it kind of strategically positioned there so you can take Europe and US deals?
Yeah, we're a global fund. So we were founded over 3 years ago now. So we're the venture arm of Angelini Industries, which is headquartered in Rome, has diversified business lines across industrials, robotics, real estate, and pharma. So they started this venture fund to focus on the future of healthcare. So it's a 300 million euro fund split between biotech and health tech. So we're investing in early stage therapeutics and then the categories that I just mentioned before. Most of the team is in Europe. So we kind of invest across Europe, US, and we just even opened up an office in Singapore. So now doing more work in Asia and the APAC communities.
Yeah, that's awesome. Okay, great. So we'll circle back to Angelini here as well, but I want to go back to your time as operator. I'm curious. Well, what is your background that led you into healthcare? And then let's start there first. Yeah, what's your background that kind of got you into healthcare?
Sure. Yeah, So I feel like a lot of people in the industry, you grew up wanting to be a doctor and then quickly switched into the bar business. So I grew up in a family of physicians, and my mom actually ran their practice. So I saw both the business and administrative side of healthcare and the clinical. So I thought I was going to become a doctor, quickly realized that I actually get really nervous in hospitals and blood and seeing all of that. So I pivoted a bit to the business side. So I studied healthcare business and economics, and then really didn't know much about the venture capital entrepreneurship world. I thought I was going to go down the hospital administration route, or consulting. And I had an internship when I was in college at a digital health accelerator called Startup Health. They're still operating today. And that really opened my eyes to the tech side of healthcare, and more of the innovation. So I got really excited about that, in that you could provide value to all stakeholders in healthcare, not just patients and providers. So started to really dig into that space, and it led me to joining a startup, and then the venture world where I am now.
Yeah, very cool. What so you go to school for business, and then when you come out and you're thinking about joining the startup company, how pivotal was that role in that company? Like in terms of being see a number of different things, and answer that with the other question, which is, now that you're on the other side of the table, what do you leverage from your operating days in your venture role now? Because you see this a lot, right? Like when if you go to, like any of these conferences, you'll hear these different venture groups chat, and they'll frequently talk about how they were operators and now they're on the venture side. So I'd be curious what you pull from that experience.
Yeah. So a couple of things. I think I was graduating business school with all of my colleagues going either into investment banking or consulting or marketing, and there really wasn't a strong pull for entrepreneurship or startup or even venture. So I knew in the back of my mind that's what I wanted to do, and I stuck to that. It was kind of scary being in how startups are. You're recruiting when at graduation, basically, and all my friends had jobs, and I was kind of signing the offer letter at graduation. So I think that's changed a lot since, which I'm very excited about. The really push for entrepreneurship, even at the business school level, it's great to see. And I think there needs to be more programs to support that. So that was my first push into entrepreneurship. And then when I was at the startup, I was joined as the 10th employee, I think. So was doing everything from product, marketing, sales, like you just put out fires everywhere. I did not touch engineering. They, do not want me to do that. But it really, being on the other side of it now, I think the biggest thing for me is that you just develop another layer of empathy for the founders. So you know what they're going through on a day-to-day basis. Like when you're going out to raise and speak with investors, how much a potential distraction it could be from the core business. So always having empathy for the founders and understanding, okay, like what levers can you actually pull when you're operating a business. So yeah, it taught me a lot about ICP and how to think of an ICP in the early days, even like pricing and contracting and how that can iterate over time. So it taught me a ton of putting like processes in place to deliver value down the road, and how important it really is to set the foundation.
Yeah.
In the beginning.
Yeah, it makes total sense. And also, I always ask that question about the size of startup and what employee you were, because we inherently talk to people in the industry who are like, oh, I'm a part of a startup company. And they're, it's like 150 person company or 200 person company. I'm not saying that's not a startup anymore. Just the startups we're used to working with is like, yeah, there's 10 people probably at the most, like they haven't truly scaled yet. And eventually they do, but being the 10th employee is drastically different than being the 100th employee, right? At an early stage startup. So it's super cool. So what causes the switch to Wyndham? Because that's, we had met, you had spoken at one of our conferences in Houston when you were a part of Wyndham. And so that would have been your first venture role, I suppose, right? So what makes you want to switch to not the dark side, but the other side?
It could be the dark side. Yeah, I did not think I was going to switch that early on in my career to venture. I thought I was going to be operating for a while. I loved the startup life. Really loved what we were building there as well. A couple of things. One is I startups always get to the point where if you're such a generalist at a company and you're doing the product, the marketing, the sales, you get to a point and a good inflection point where you need to hire the expertise for those levels. And I was getting to a point where I wasn't forced to choose by any means of like which vertical or department I wanted to fit into, but I was felt like I was getting to a point where, okay, I had kind of have exhausted my skills at this point, and I was looking to what's next. I always think you need to be learning every day and being challenged every day in your job. And I was at the startup, but I was looking for my next challenge. And I thought Wyndham was a great opportunity, and it definitely was over the 3.5 years that I was there, because we were investing in the categories that were near to dear to my heart, and you're still like a smaller fund. So we were scrappy and operational. It was kind of like a startup in itself. So it's getting the best of both worlds.
Yeah, that's awesome. What was different? I mean, structurally, Wyndham and Angelini are probably different funds, right? Different sizes, different construction. What was the biggest learning experience for you? And then I also want to know about, it's not like you're done raising capital. I think that is like a common misconception of startups when they talk to investors is, investors are also, for the most part, like always raising, especially VCs, right? I mean, maybe it slows down a little bit, but you're probably setting up your next fund, and so, I'd be curious, what was that switch like where, instead of raising on a single company, you're raising on a portfolio of companies, but then also, was there another learning experience that just kind of first time in it, you're like, oh, I wasn't expecting that?
Yeah. I'll take the first learning first. I was coming into venture thinking it was super competitive with other funds. There's only one investor in a fund, and you take the whole round, and like you're trying to beat out other investors. But in some cases it is that way if you're more private equity, but in many cases, it's the opposite, where a lot of funds work together. They syndicate a lot, they share diligence notes, they brainstorm together. So from that perspective, it was really great because you could learn from your peers, and go to conferences and see the same people and develop those relationships over time. Venture, at the end of the day, it is a relationship driven game. And it's who you got to get introduced to, who shows you the deals, what advisors or network you have to build customer relationships for your portfolio. So it really is a people game. And that was something that I didn't know before. And that also goes into more of the raising part is you always have to be behind. I think more and more people, as they age, they learn life is about selling. So it's not just selling your company to VCs, but VCs are also always fundraising. Even if you raise one fund, you have to start thinking about the next one. You have to think about portfolio construction and how you sell that. So it is more than just, okay, do you have a large product? Do you have a good product, large market? Are you the right team? There's a lot that goes into it that's around just deal dynamics in general and portfolio construction, because you have to answer to LPs at the end of the day as well.
Yeah, and actually, we've talked a lot at events. We've talked a lot on the podcast about, hey, what are VCs looking for? Blah blah blah. Investors looking for, and that is like a very pertinent conversation. I'm not discrediting that, or else we wouldn't talk about it. Period. But I want to kind of focus a little bit of your time on like this portfolio construction when you're thinking about your fund, but then also LP management and LP relationships, and how you navigate that. Because we're learning a lot. But also like I have to imagine that the more LPs you have, and do you have some LPs who are really interested in what you're investing in, that build relationships, and some are very passive and are like, hey, here's my money, let me know when you return. But others aren't. It's the same thing as raising from angels in a startup company. And so how do you navigate that and your strongly opinionative LPs? I feel like there has to be, like an art to that as well.
Yeah. And I would say at Angelini, we have one LP, the Angelini Industries. So easy to manage from that perspective, but you are also always answering to them. And I think at the end of the day in healthcare, there's a lot of, when you think of the LP universe, you have the family offices, the high net worth individuals, the more institutional capital, the fund of funds. So what I've seen through my experience is that there's a lot of high net worth individuals or family offices that have a strong healthcare connection, either their family member or someone, they get pulled into healthcare for one reason or another, and they do want to pour their capital into it, because I do think it relates to everyone at the end of the day. So I think that it is good for innovation. People are investing in funds, they're investing in companies as angels, and they really want to make a difference and see their check go further. So I think there's a lot of opportunity for venture funds to raise from those individuals. And there's the whole universe of the institutionals as well. But yeah, I do think it's all relationship management. It's a startup CEO managing the board. It's the fund managing the LPs. So it goes up every ladder.
Yeah. And I think, so you've been in two different funds. And again, we kind of talked about at the beginning. I mean, so Angelini is drastically different than Wyndham was. And they both pose different challenges and benefits, right? To having a single LP versus potentially 100 LPs or more than that, depending on how you kind of set up that structure there. Is any one of those, do you think, is more challenging or easier? Because I feel like, yes, you have a singular LP, but that might be easier from a fundraising perspective, maybe. But I don't know.
Mm-hmm.
I'd be curious on your thoughts on that. Or they're just like two totally different beasts and they both present challenges?
Yeah.
Yeah.
No, I mean, they're different, but at the end of the day, we're investing similarly. So I'm not going to downplay raising a fund is incredibly hard for, I think, everyone in this market. So there's that. But at the end of the day, once you have the capital, and it depends on how funds are structured and what they underwrite to, what their investment life cycle and fund life cycle is. But you have the 10-year fund life cycle type of funds. You have the evergreen funds that once you're starting out as an evergreen fund, you want those quick wins, but over time you could play for the longer game. So it's all of these different types of fund vehicles and structures that kind of dictate what they underwrite to and what companies make up their portfolio.
Two questions. First one is, when someone says, oh, this is a hard market to raise in, what macro data points are you looking at when you say that? Is that because the public markets have been up so many years in a row that why would someone need to take a risk in a risky asset like venture? Or we hear people say that a lot, and I think a lot of partners are like, well, why is it hard to raise a fund right now? So when you say that, what do you mean?
Yeah, I mean, a couple of years ago when everything wasn't going well, I think everyone took like a keen look at their portfolio, whether it be fund managers looking at their portfolio and LPs looking at their portfolio. And what the real switch was not growth at all costs, but more a shift to profitability. And you actually want to generate some revenue, generate profit. And what this meant for LPs is that they want to see DPI. So if you're a fund manager raising the next fund, they might not commit until you have DPI on the prior fund. So everyone was getting constrained in the markets, and you just want some money back in order to reinvest it. So there was a strong focus for profitability and DPI at all levels.
Awesome. I was on mute there for a second. Don't worry, everyone. That pause you won't hear because it'll be edited out. The DPI. When you say DPI, are you talking about distributed paid-in capital? I mean, just for everyone listening in, what
Yes.
does that mean? It means you got to win as a fund, and you return some of that to your LPs.
Exactly. Yeah. There's the DPI, and then you have like the TVPI, which is the total value of the fund plus the residual. But DPI is the actual monetary value that is getting back, is returned to funds.
Awesome. Okay. So if you were a startup company raising from venture, what would you want to know about the fund you were talking to? Like, let's say you're having good conversations with the fund. You determined they were a good target based on size and geographical area and everything like that. What are some of the additional things you would want to know about that fund that would help you as a startup understand what their goals are?
Mm-hmm. Yeah. So I'm actually going to do first like the filtering, because some people still don't do that. And I know it's hard, with websites could be pretty cryptic on what they invest in or how they invest, but at least trying to do some research, looking at portfolio, because if it's so out of scope, you likely won't get a response from someone. But just doing that basic homework just to see if it's relatively in scope is the first check. And then secondly, I really like it when founders ask not just beyond, okay, what's your check size, what's your fund, what's the fund size, but also like learning more about our process and how we think about the markets, and then how we can be value add investors. So I think there's a lot of investors out there that could just throw money at companies, but I think when they're on the board or as an investor, how can they actually help lift the company up more so than just the monetary value? So is it introductions to customers? Is it helping with hiring the C-suite? Is it actually executing and like running some financial modeling? So it could be as nitty gritty and in the details as that, or it could be high level and more strategic. But I want founders to really understand like who they're getting the capital from, and making sure it can be strategic money.
Yeah. And how much does like the current mechanics of the fund matter? Like I always tell startups to ask that question too, especially with new funds, are they actually deploying capital right now, or are they still raising? Are they planning to make 10 investments? They've already made 9. I think those, especially when you're going to give up a board seat, like those things for sure matter, because again, they're beholden to LPs. And so they might be more enticed to have a quick win if you're their last investment, they haven't had a lot of wins, and something comes to the table. They might be more inclined to do that. I mean, is that those things you see as well?
Yeah, no, that's a great point. Understanding where they are in the fund life cycle is extremely important. And if they're currently in a fund raise, you could even ask them like, what are the LPs? Who are you raising money from? They're not going to disclose everything, but just trying to get a sense of, is it strategic capital? Is it individuals? Are there co-investment opportunities from the LPs? And yeah, if you're 1 or 2 checks left of a fund, then what are like weighing the opportunity costs there?
Yeah. What's in terms of follow-on investments and special purpose vehicles as well? Like, I know these are 2 totally different things, but I'm curious how much do you see those in later rounds? Like you're investing in A and B. Do you still see, like, I would anticipate you would see that a lot in like seed rounds, where, you know, maybe an early stage fund gets in and then says, hey, LP base, do you want to also, you know, write a check in there? Do you still see that in A and B and C? Does it cause any problems? Yeah, I'm guessing it's not competitive, but I would imagine if you had a few funds in there that were all offering special purpose vehicles, you could probably start to see how that would get kind of crowded at the competitive round. Do you still see that or not really?
I have seen it. So it depends on how a fund is structured and whether they even offer co-investments in the first place. But I've seen it all the way from seed A all the way to IPO rounds and
Oh,
crossover.
wow. Okay.
So yeah, I mean, in that case, it's tough to get in,
Yeah.
but I've seen it.
Yeah.
So I wouldn't think it's out of the question.
Interesting. Okay. Yeah. I wasn't sure on that. You know, like I said, we're learning a ton about this investment side of things, and that's been something that's come up. And I was just curious how much that happens, you know, later in rounds. I guess one more question as it relates to this and the later rounds as well is, as companies get hit major milestones, and you said, you know, you see a lot of funds syndicate. Do you see the competitiveness come out as companies really start to kind of take off and get later in the round, or does it continue to syndicate well? Because it's always, I feel like you would think that they would continue to syndicate a lot, just because it's always nice to have someone else alongside you in case you do need a bridge round and that kind of thing. But yeah, when does it get like nasty between investors like that, and you see people starting to block each other out of rounds? Is it much later, or does it happen early too?
It could happen early. It depends if the fund mandate is like, oh, I can only lead rounds. If they could only lead rounds and be the only one that puts in term sheets, then if you're competing against another fund that only acts that way as well, then it's competitive.
I see.
But for those that could lead, follow on, co-lead, then it can be more collaborative. I do think in later rounds, there might be more, some funds might take, they have huge check sizes, so they might take the whole round. In other cases, investors like to see a syndicate and 2 new investors come in, but yeah, it's more contextual.
Yeah. So you've dropped a lot of nuggets of like kind of what you like to see, questions you like to ask, things you like to hone in on. Are there therapeutic areas right now? I mean, I know the areas you're interested in, Angelini, but are there specific therapeutic areas that you're like, this is something that we're really interested in? Do you look at therapeutic areas when you're building out your portfolio construction?
Yeah.
Is that something you look at even before you start, or is it something you look at as you go and go, shoot, we're really heavy on vascular, or we're really heavy on oncology? Or do you go into that and say, hey, we like these 5 areas, that's where we're going to kind of concentrate?
Yeah, I mean, you don't want to be overexposed in one area. At least we don't to an extent. But yeah, we've taken more of like a thesis-driven approach where so our current 2-ish priorities or thesis areas that we're really interested in is cardiology and neurology. Also oncology is one, metabolic health. So we have a few different therapeutic areas, but we've done deep dives into cardiology, neurology. So we feel like we know those spaces well, and then we map those against different technology modalities. So it's always interesting because we also work with the biotech team. So understanding the full spectrum of healthcare, we always like to see what is the right intervention at the right time. Is it a biotech therapeutic, or is it a more procedural device, or is it a tech-enabled service? So really understanding, like, we can invest across the whole spectrum. What is that right intervention? So in cardiology, this might not be a great example because we haven't really done a deep dive into it, but like structural heart, for example, that's purely mechanical in some cases. So does a biotech come into that, or is it more MedTech there? So really thinking about like what is the right therapeutic approach. And then when we're building the portfolio construction, I think it's happened naturally where we have a good mix right now, but we always every couple of months look at the portfolio and the pipeline and think, okay, is this well-balanced portfolio across technology, modality, and therapeutic area.
Yeah. How do you evaluate team in this aspect? Um, I think of companies in stages, and the right team for each stage is probably different. And so, you kind of have this like 0 to 1 team. You have a team that kind of gets you to probably like commercialization / clinical validation. And then you have this team that's going to probably take you the next step. And maybe there's a team that comes after that too, but there's definitely there's definitely a clear delineation between like that initial team and then that team that's going to take you to commercial traction and beyond. How do you evaluate that, especially coming in at Series A and Series B, where they could be in the middle of a transition?
Yeah.
That's everyone's betting on the team, right? And I mean, everyone talks about that, but there's so many technologies out there, and it really does come down to team and execution. So, are there challenges with evaluating a team that's either in transit or hasn't proved anything yet, potentially?
Yeah. I wish I had like a better answer or like algorithmic way to evaluate team, but it really is just getting to know people over time. And I mean, obviously their experience and like what they have built and done in the past makes it a huge impact. And if they're surrounding themselves with the right people, like a company can be, maybe I don't love the product or where it's going, but they have an incredible sales team and board, and they have the right people around them that can help iterate on the product to get it to the right place. So are they surrounding themselves with the right people? Do you think that they are the leader and people want to work with them and for them? It's a hard question to answer, but you just learn that over time. And then, it's someone, at least in like the MedTech community, developing clinical validation might not be the same person to commercialize. And we understand that we never come into companies to replace CEOs or management teams, but just working with them and trying to find a solution, if that might be the case. And what I'm also seeing is, so I've always preferred healthcare backgrounds driving healthcare companies. But at least in the AI tech world, I've seen a lot of non-healthcare people coming into healthcare and doing extremely well. So I think it's just different in the AI boom and pure like AI foundation companies, but it is quite interesting that you can still do well on the tech side. Yeah.
And actually, your answer is kind of perfect, because I think that that is something that I think it's just like soft skills of talking to people and seeing who you have a nice connection with in terms of how they evaluate these teams. Because there's like 100 different ways, you can do some like, oh, we use this method and we evaluate all our teams this way, and there's 100 bullet points, they answer all these questions. It's like, yeah, maybe, but I think some of it just comes down to like, over time, you get good at saying like, oh, this person has it or not. And I don't know if there's like some scientific way to go about and do that. And you'd like to think you have a process, but to be honest, sometimes it's just like your gut feeling. And like, we've learned that at Project MedTech, like all the companies we work with, even our internal team, like sometimes you just know if someone has it or they don't. And generally your gut is pretty right. When you answer that, I'm like, if someone asked me that, I'd probably answer it the same way. Cause like, I don't know what a better way to describe it.
Yeah. And you're also making the investment for the long term, like a 3 to 5 year underwriting period. It could be more than that. So you have to work with these people for more than just the diligence period. So you really want to work with these people, be on the board with them, if that's the case, for 5+ years.
Yeah. These investments are going to take time, right, to get you in a return. And we always tell the startups this too, is like, as you raise capital, like you're kind of getting married to all these investors. And so, you should feel good about them coming into the company, onto the cap table. And like there's definitely a thing as good money, bad money, and neutral money. And sometimes it's hard to, people can change and move around even once they come in, but as much as you can evaluate up front to determine who those individuals are, it's really okay. What is some of your best advice for an early stage company out there raising capital right now?
You'd think I'd have like a great answer to this right now. Yeah, no, I mean, I think it's just refining the pitch. And what I mean is like, getting into like the investor's mind on like the key bullet points that they want to hit is market, product, team, competition, and like the round, and how is the round attractive to an investor. And you could kind of navigate that story and narrative differently for different investors depending on the types of companies that they're investing in and their track record. But really like doing your homework and understanding the investor that you're speaking with, and refining the pitch for them. I'm not saying change the story for every investor, but understanding what captures their eyes and kind of will get them excited. And yeah, some investors might know the med tech space extremely well, some might not. So like level setting with them and under kind of giving the backstory, okay, this company is developing this technology, which this incumbent is heavily invested in right now. And that's why it's interesting. So coming with more context into the larger ecosystem, I think is helpful as well.
Yeah. I like that you brought up the point about kind of getting in the mind of the investors. I forget who said it recently. I heard something where it was their thought process on negotiations was, if I go into negotiation and the other person feels like they won, then I win because we got a deal done, you know? And it was really interesting because I think sometimes people go into negotiations like, well, I got to get what I want. Yeah. But if you both don't get what you need, then it's not going to be a great relationship. Let me ask you this about one other thing. In all the bullet points you kind of brought up, the one, two that I think sometimes is often overlooked, or I feel like startups don't address enough, is exitability. Like who is going to buy this and what is the end game? And it's not from the sense of like, oh, Boston acquired this company and Medtronic acquired this one, and our one competitor that's in a similar space got acquired by this company. It's less of like, I don't need to see the logos. Like I could probably figure it out if I'm a MedTech person of who's going to be interested in you, but explain why. Like, is this going to be, if this is going to be a tuck-in, why? If this is going to be a total, I'm going to get commercialization, I'm going all out and I'm going to take market share from them, then that's fine. But you better have a really good answer of how you're going to do that and what that takes. And so I'm curious on, do you see startups do well in that area? Do you kind of pick on that a little bit? And how much do you even care about that? Or are you like, we know the M&A market, we're good, we don't need someone to convince us that it's exitable?
Yeah. I mean, I think every good MedTech investor will know the M&A environment, and the different logos, but it also depends on like forward looking. So what I mean by that is kind of have to like be an agent, like understand like what are these companies working on in the future, because they might not have the product right now, but a lot of these, all of the MedTech and companies have huge engineering and clinical base and a force that can execute very more quickly than a startup can, likely, if they just pour the money into it. So what are they building for the long term? You could figure it out through earnings transcripts or like even their careers page, like who they're hiring for, what teams they're building out, like kind of scratching the surface there to see, okay, they might not be a competitor right now, but are they in the future? And what's the difference in the technology? So that's number one. And then number two is, this is going along with that, but a company can can win a market or potentially do well in a market in the next 3 to 5 years based on their technology, but will technology outpace that quicker? So using technology A? Is there a technology B that is in development right now that's a little bit nascent and not there yet, but in the future it will be? And then if I'm a med tech, like I won't acquire this company that's only going to be good for 5 years. I'm going to build out or acquire the other company that will be good for the long term. So it's kind of, okay, it's not right now is the exit, okay, and the strategics understanding that this piece, but they're looking for the future. They're not looking like 2-3 years out. They're looking to have this for the lifetime. So understanding really, does this fit within this current workflows, reimbursement, product life cycle of today, or is it really for the future?
Yeah, I think there's so much that investors can bring to startups on this M&A side, like kind of just the things you just mentioned, which is, obviously they're going to be experts in the space and they should be worried about that and be figuring that out. But I think that, to have lead investors alongside like yourself who can help kind of think through some of those things is really important, because that's a ever moving target for all of these companies. Awesome. All right, Sarah, I really appreciate you joining. We will include a link to your LinkedIn and to Angelini's website in the show notes. Hang on for 1 minute. We'll chat offline, but thanks so much for joining today.
Yeah, thank you. This was fun.
Hi, I'm Freddie Coffey, Director of Marketing at Jumpstart. The Project MedTech podcast is proudly sponsored by Jumpstart Inc. Jumpstart's Trailblazer Accelerator helps Ohio's most innovative early-stage health tech startups fast-track their growth with tailored advising from serial entrepreneurs, non-dilutive funding to fuel their journey, and unrivaled access to a network of experts, resources, and investment opportunities. Whether it's improving patient outcomes, advancing digital health, or reimagining care delivery, Jumpstart provides the high-impact services and critical resources to bring big ideas to life. Learn more at jumpstartinc.org/startups.
Thank you for listening. At our core, we at Project MedTech are networkers, educators, and consultants. We meet you where you are to bring value and to create impact. We care deeply about helping medtech companies succeed right from the start, through to exit, by providing consulting and fractional services, hosting impactful industry events, and of course, sharing incredible guest insights like the ones you heard today through our podcast. Please reach out at any time if we can be of assistance. Check out our website at www.projectmedtech.com or email us at info@projectmedtech.com.